Weekly Market Outlook, Calendar Week CW32, Strategic Perspective on Digital Assets and Macro Markets. The past week was marked by monetary restraint and a cautious market sentiment. The U.S. Federal Reserve kept interest rates unchanged at 4.25 to 4.5%. However, two members already advocated for initial rate cuts, sparking speculation about a potential policy shift in the fall. Durable goods data showed a 9.3% decline, negative but less severe than expected. On a global level, uncertainties around trade conflicts and geopolitical developments continued to dominate. Even the oil market reacted modestly to the recent OPEC decision, suggesting a relatively stable macroeconomic environment. In the crypto markets, sentiment cooled noticeably during this phase. The Crypto Fear and Greed Index dropped from a greed-driven 64 to a neutral 53 within a few days. Investors remained cautious, many waiting for clear signals from the macroeconomic front. While Bitcoin consolidated in a narrow sideways range, altcoins experienced slight declines. Bitcoin dominance remained stable, indicating a cautious stance toward more speculative assets. Several key macroeconomic releases will be in focus in the coming week. On Monday, U.S. factory orders for June are expected, offering insights into industrial investment behavior. Tuesday brings two particularly market-moving data points: the U.S. trade balance and the services PMI. PMIs are considered leading indicators of economic momentum, and surprises in these figures could directly impact sentiment and volatility. Thursday will be particularly data-heavy, with weekly jobless claims, productivity figures, and household credit developments on the agenda. These metrics offer valuable clues about U.S. consumer strength and underlying economic activity. In addition, Thursday will see two international rate decisions. Both the Bank of England and the Central Bank of Mexico will announce their latest monetary policy stances. On Wednesday and Friday, two members of the U.S. Federal Reserve will speak, offering potential insights into the future direction of interest rates. For crypto markets, Tuesday's and Thursday's data are of particular relevance. Positive surprises could boost risk appetite, supporting Bitcoin and Ethereum. Disappointing results, on the other hand, could trigger increased volatility, with altcoins typically experiencing sharper swings. The currently neutral Fear and Greed Index reflects a balanced market mood that could shift in either direction in the short term. There are no notable token unlocks or major project events, e.g. hard forks, mainnet launches, scheduled for calendar week 32. Market movements are thus likely to be driven primarily by macroeconomic impulses and institutional investor behavior. Against this backdrop, quantum data analytics adjusts its trading signals accordingly. The focus is on mid-term swing trading signals, particularly for Bitcoin and Ethereum. Short-term trading volumes, especially in illiquid altcoins, are being scaled back. Risk is mitigated through tight stop-loss zones. Signal intensity is dynamically adjusted based on the Fear and Greed Index. In extreme scenarios, signal frequency is systematically increased or decreased without making price forecasts or investment recommendations. Our systems do not issue action recommendations, but provide purely data-driven signals for technical orientation based on publicly available real-time information. Markets remain caught between economic resilience and monetary caution. For investors in digital assets, it is now crucial to act flexibly and based on data. The coming week will show whether confidence in economic stability is strong enough to trigger new momentum, or whether uncertainty once again dominates the picture. Quantum data analytics, analytical, strategic, innovative, quantda.com.